Morning. Happy to see you guys again. So, if yesterday was indeed the perfect storm, is today the idyllic calm after the storm? Let's dive straight in and have a look. So, let's go very quickly today. I spent a lot of time yesterday just giving a general recap, but today we're going to fly through things to have a much shorter video. So, yesterday, as we saw, the SPX had this crazy nice reaction that I actually was looking for in this zone of support, this overall historic zone of support. Please do not forget the reason why we are tracking this is to see our overall sentiment, to see what we are going to do in the risk asset class of trading. So essentially, this is the last line of support. If we continue this bearish market structure down, then we've got a bit of trouble. So just all eyes on this zone. If we find support, we can take our longs. If this starts breaking down, then we do have some kind of a heads up as to what's going on. The Dixie is powering straight through this order block, which is pretty scary stuff. I say next level to look out for is this taking the next set of highs around 107.195. Let's move on. Okay, so what we have here, as we always have a look at our spot versus perpetual CVD across all the exchanges, we have a slight uptick in spot, which is what I'm going to be leaning a little bit further towards. You'll see when I give you some setups later that we can favor the longs for a little while, and we are probably going to then hit some resistance. So bear that in mind. We do have this still this growing, really speculative kind of trading in the perpetual markets. This is a very strong downtrend, as you do know. This is a very slight uptick that we're going to use today. Overall, however, the only thing that is keeping our markets alive very seriously is this very speculative kind of approach in the perpetual markets. Just bear that in mind. We have this very bearish, very high time frame outlook on things. However, that doesn't stop us from taking longs as you saw yesterday. So what I want you to remember is that I showed you that we have these market makers trying to keep the market up, and we had this zone. Let me move you across over here so that you can actually see, so that I'm not blocking the screen. Right. So essentially what I said here is that we had these market makers really just sort of squeezing price into a zone until such time as they were ready to take the market in the direction they pleased. And that was up yesterday, obviously. So, what we see here, yet again, after the big move, is that they start shaping the market and keeping things a little flat. What we saw yesterday is this very serious, strong wall that gave us a signal that we could expect a rise. Okay, so what do we see here? We do see that they have essentially stopped this very, very sharp, dramatic, rapid move to the downside, and they started shaping things once again. These little white blocks that you can see here are the market makers putting in big, big walls, and they're slowly stepping them up, as you can see. They also kept things up here when price was having a little fall off. So essentially, what you can see is that market makers do want to take us up, not too far, however, because they've placed a wall here. What I'm going to show you later is a target zone. So bear this in mind. This block over here is near the top of the latest swing high. So essentially what that is, I also want you to just bear in mind this little area over here, I'm going to show you in the charts, is an order block that has formed. So there's a big area of resistance that we are going to essentially meet when this over here, when our price reaches this zone over here. Yeah, so just bear that in mind. So what I do see here is that market makers do seem to be wanting to push us up to the upside first. It's going to be probably a lot more of a chilled day because it is Thursday. We have had a big move already during the week, and I think we're going to have some far more relaxed trading today, which is quite nice. You've had your thrills yesterday. There's definitely trades to be had. Let's dive straight in and show you. Okay, so I just want to bring us back a little bit. So this is the range that we've been having a look at for quite some time. What I want to do is just quickly take you through yesterday's trade. The long that I gave you was to have a look at if we broke out of this channel over here and then back tested it, you could go long, and that's exactly what happened. So if you have a look here on a lower time frame, you can see that is exactly what happened in this candle here. We shot up above, we came and back tested it. That was your entry right there to get a roughly 2% trade, unless you weren't already long from around this region. So if you took the trade from around there, you would have had a 2% trade. Okay. So then we also started seeing our this kind of a formation at the top here that is supply and a distribution. So what we did is we took our short from there all the way down. I think I took final profits at 26.1K, which is roughly the bottom there. So that was really good. We were updating that a lot in the group yesterday. Now, let's just go back and have a look at today's trades. All right. So where are we? I just want to frame things again. I've been giving you these support resistance zones, but let's just uh, bring them up here again. This over here was taken, this channel was taken from this high and this low over here. I'm probably in the way of that. So let's just move this up for you over here. So it's taken from this high and this low. Have a look at the midline respect. Have a look at the channel respect. It's been pretty spectacular. Okay. So bear that in mind. Have a look at this perfection over here. Bear in mind, we also have the anchored VWAP, which has been acting exceptionally well as a support resistance zone. Then have a look at this channel, which is last week's high and low. So this channel was basically last week's range. Have a look at the respect of the midline. This was exactly yesterday's high, and have a look at the respect. It's oh, hang on a second. That I apologize. These last two over here is current price. It's not the midline. But have a look at midline over here, and really roughly speaking, midline over there, and the bottom and the top. Okay, so bear that in mind. Furthermore, we have our original SR line that I have drawn out for you, and our other SR line. This is what I want you to have a look at here. Have a look at this zone. You've got a huge amount of resistance building up. I also showed you in the previous screen that you have this order block area over here. Okay, so bear that in mind. Then, okay, so that is the order block. If you go down to a 30-minute time frame, just to show you how I get that, that is the order block in that candle over there. Okay. I do want to show you there's another 1 hour order block that formed down here just to start framing things for you. So you've got these zones that you need to be aware of. This zone over here, and roughly speaking, the top of this channel and this anchored VWAP over here. You have the bottom of this channel over here and this order block area over here. And don't forget, obviously, you've got a lot of liquidity building up below these swing lows over there. Okay, so so I'm now starting to draw a picture for you. Unfortunately, today there's a problem with ExoCharts. That is the order flow software that I use to give me a very good idea about the open interest, the type of volume that's coming in from the longs and the shorts, and et cetera, what's going on there. So what we're going to do is we're going to start using, like I say, every good sailor needs to know how to navigate by the stars. When your instrumentation fails on you, what is it that you're going to do? Well, you just go back to the old school, old principles that work very well. So what I want to show you here is we have a look at the volume profile at the bottom here on TradingView. What can we see here? We can see on this rise over here, we have this rising volume. Okay. What do we have here? On this rise over here, we have a drop in volume. So it's a fairly weak rise. Okay. What does that therefore mean? Just bear that in mind when I start drawing a further picture for you without the help of my fancy order flow software that I have actually become quite accustomed to using. So today it was quite interesting logging in and seeing that there was nothing there for me to actually use. Quite fun actually, therefore, just to put the puzzle together without it being quite apparent to you in Exa. We have our TD, Tom DeMark sequential 8 and 9, non-perfected, which you can see it's a non-perfected setup because it isn't the full green. It's got this sort of double ring around it. That just shows you that this uptrend is flagging and weakening. That's what it shows you. So you can start to look for your entries for your shorts. Okay, that's what it shows you. It doesn't mean obviously to just blindly take trades. It just gives you an idea. This is on the 1 hour time frame. Okay, so we have a drop in our volume. So we've got this weakening uptrend. We have a Tom DeMark indicator telling us that we are essentially starting to favor shorts from this region. However, we do have, let's just go onto our 4 hour time frame here, which is a sort of a medium term time frame. You can see we do have a current uptrend. We don't know where this is, and current bullish market structure. We don't know exactly where this is going to end. Is this in fact the high, or can we target up to the top here? Well, we don't know. You never actually know, of course, in trading. But what I'm going to do is I'm going to show you both sides of taking longs and shorts today, building all of the little data points that we have and understanding what the probabilities and possibilities are. Let's go back down to 2 hours here. Okay, so let's now again put the picture together. We have had our big move of the week. It's fairly uncommon to have two big moves in the week. Okay, so therefore, what we do think we're going to have is a lot more chilled out kind of trading. We do have news later on today at I think 2:30 GMT plus 2. It's the jobs data coming out. So let's have a look for some kind of trigger around that point in time, or any moves that we want potentially to catch. All right. It isn't a major impact news event in terms of looking for crazy wild moves. And right, so the data that we have is decreasing volume on the way up. We have a Tom DeMark indicator telling us that we do sort of need to start targeting our shorts. However, we have a bullish market structure. So what do we do in this instance? We have a look for both sides of our entries. We have sort of information telling us from both sides that let's go down to a 30 minute time frame here. We've got information saying to us that you could favor longs and shorts. So where are we right now? You can see that we are consolidating in this zone over here. So I've drawn out a fixed range for you so that you can see where you want to start taking your shorts and your longs. We are above support. Okay. So it does, and we have positive bullish market structure. So what does that mean for us? It does mean that we should start at least in the zone of support and in the discount zone, which is below this value area low. We can start looking for long entries to target this area over here. So what does that actually look like? Looks like that. What I've done here is, what you want to do is, once there's a wick below this zone over here, and you must see a wick, it's very important, because that means that you have a demand to buy it back up again. If you don't see a wick and you just see the slow bleed, then you know we've broken down from this zone, and you can start looking for some scalp shorts down into this zone over here. Okay, so you want to see the wick. When you see the wick, what you're going to do is you're going to set your stop loss at, you're going to set, sorry, this side. You're going to set your stop loss at the wick, right? You're then going to target all the way up to the top here. What have we already done in terms of looking for take profit zones? What we've already done is we've claimed around 50% of this fair value gap created when we dropped. So we've already done that. Okay, so you've got some fairly easy and well-defined areas of your of take profit. If you remember, in this screen over here, we've got very little resistance up until we get to here. Okay, what is that? That is 26,680. Okay, I would take profit just before that zone and then start to take more profit in this zone over here. All right, 26,680 is actually quite close up to the top here. 26,680 it was. Yeah, so it's actually quite far up at the top here. I would shave off a little bit of profit around here, because there are going to be some stops around here. It might retard price, and you might actually just see it rolling over. So I would shave off some profit here. I would shave off some profit at 26,680, and then I would start shaving off profit at our resistance areas and into our order block over there. Okay, so that is your long entry. For your short, just before I show you that, there's a very well respected channel over here as well. So you can start seeing where price. Look at this midline respect. Fantastic so far. You can, of course, change the way that this channel is drawn. Maybe you want to have this bottom line over here actually touching some wicks. It's up to you. But look at the midline respect so far. Very good. So you can use that, of course, to take some profits as well. You can start seeing, let's say, for example, price does something like this. Look at for where it hits the midline. Okay, right. Now let's have a look at our shorts. If, however, we favor the fact that we have our Tom DeMark sequential telling us to start looking for your shorts and this flagging, ailing kind of volume on the way up here, what you can do is use your little fixed range and start looking for your shorts. As soon as you see a little wick up into this area, then you know it's done exactly what we've done over here and over here. So that is where you're going to take your short, and what you're going to do is you're going to target obviously down to the bottom over here. You're going to start looking for profit taking in and around this zone, and profit taking at the top, mid, and bottom of this order block, and in and around this area over here. So that essentially is your short for the day. The reason why, oh, and by the way, let's just have a look at what our risk to reward ratio is. That's a 5 hour trade. You have a 1.4 odd percent trade there, fairly decent. And your long position, if you get that right, is a pretty spectacular trade. I mean, if you wanted to be safe, you could have your stop a little bit below these wicks over here. Um, And we have an almost 7 hour trade over there, and that is a 1.6% trade. All right, so like I said in some previous videos, if you can get your couple of percent every single day on your portfolio, you are smashing the lights out, to be very honest. And as we know, this is just one asset. If you trade multiple assets, you get 0.5% here, 1% there, 3% there, you're doing exceptionally well. So if you want to, for example, this is a day trade, of course. Okay, if you want to ping pong around here and get 0.5% at a time, that's also totally plausible. I've drawn out this little range for you. The range is going to behave until it actually expands up out of this area or down out of that area. So you could, of course, just see this the rest of the day, depending. Um, so I've given you some kind of idea of what's going on here with all kind of scenarios and situations. And with that, I do hope that you're going to have a really decent day. Like yesterday, we had some huge fun and made some decent bank, as they say. If you have any questions, please just drop them into our group. And don't forget, we have our zero point 0.1 to 1 BTC challenge where you can increase your account 10x. That's pretty crazy. So I will take you literally by the hand with that challenge if you join. So what do you have to do? Please like and subscribe and hit the that is on my Twitter account. You must please go there and follow me, like the tweet, and just show me some interest there, and you'll be added to the group. Right. Thank you. Have a very, very decent trade. May the odds ever be in your favor.